Well, nerves are on edge today as the Dow Jones tanks. Investors on Wall Street and around the world were just scrambling to sell off stocks. Some are convinced now more than ever that the U.S. and perhaps the world are headed for a new recession. The Dow Jones Industrial Average fell nearly 400 points, closing down 391. The second major drop in the stock market since the Federal Reserve announced a change in strategy for fighting the economic slowdown. Carolyn Clifford joins us live from the newsroom with what this means for you and your family. Not good news, Carolyn.
It's certainly not good news, Joanne. Well, financial experts always tell you not to panic, and investing is for the long haul. People are scared to look at their 401ks right now, and who could blame you? At the close of Wall Street, the Dow Jones Industrial Average was down nearly 400 points. U.S. stocks took a nosedive of more than 3% today, extending losses for a fourth straight day. And economists say the likelihood of the U.S. going back into a recession is higher now than at any other point in this recovery. So, if you're a parent in your mid-30s with young kids at home, what does this really mean for you? Well, first, as we said, don't panic. Making decisions in the heat of the moment is a bad idea. Our Channel 7 money man, Bob Ingram, says make sure you are saving for your future. That means those college funds you're sweating over for your young kids may have to take a back seat to your own financial well-being. 2, get your financial house in order, making sure you have at least a 3-month emergency fund tucked away. Hard to do, but certainly possible. That means spend less. For example, many parents didn't buy nearly as many new school clothes for their children this year. There may not be as many Christmas gifts under the tree, and skip those vacations. Also, have an investment plan and make sure it matches your tolerance for risk and your time frame for when you will actually be needing some money. So if you're not retiring for the next 20 years or so, you have time on your side to go through these difficult market corrections in the short run. Bob says if you're close to retirement, it's important to have the money you're going to need in the next 3 to 5 years out of the stock market. And Joanne, bottom line, we all may be working a lot longer and spending a lot less.
Yeah, which of course isn't good for the economy then. So it's kind of a big vicious cycle, isn't it, Carolyn?
It's a vicious cycle, but we have to do what we have to do to survive for us and, of course, to keep our families healthy and with their own financial well-being.
You're not kidding. And for now, maybe it'll be just covering our eyes and not looking for a couple days and hoping for the best.
Best advice.
That's an idea.
Thank you, Carolyn.